What do you have to gain from this United Capital business, and what does it mean for your plans at Creative Planning?
We're an independent wealth management firm. We're focused on, about 40% of what we manage is for people that have 10 million and up, but the rest is what we call the multimillionaire next door. I think we're the industry leader in the independent space there. And what what Goldman had in United Capital is another independent firm. And I think, Goldman's a great firm, United Capital is a great firm, but putting an independent within Goldman, it was difficult for both sides. So now they're kind of back in the world they're used to living with. They're in a firm that doesn't have its own investment products and is a fiduciary all the time, a lot more independence. I think in our environment, I think they're going to be more likely to grow.
What does this mean for you and the entire industry? If you saw there was a lot of consolidation when you looked at the RIA space, when you looked at these wealth managers for so many years, and a lot of competition among the big banks, are the biggest banks not always the most well-suited to hold businesses like this?
You look at, say, the custodians, you've got Fidelity and Schwab and then everybody else. And then you've got the Morgan and Merrill and everybody else, and Goldman and JP Morgan and everybody else. But if you go to the independent wealth manager space, to your point, there's a lot of integration still happening. There's 35,000 firms. It's highly fragmented. Even Creative Planning, as one of the largest in the space, is maybe 1% of the entire capitalization in the space. And so we're really in the early stages of these firms, firms getting bigger. And I think we'll eventually see this space look a lot like the CPA, the tax world, where you've got just the big four and then some regionals and then some independents doing different things. I think we're heading there, but we're in the very early stages. And this is a big step in that direction for us.
And Peter, Goldman didn't disclose the sale price. Are you able to tell us what you paid for this?
I am not, but I'm happy. We're feeling good. Yeah,
okay.
We're happy.
All right, I'll read that in a certain way. Appreciate that. And so when you think about the path forward from here, I'm curious, at a broader level, even beyond these deals, the conversations that you're having with clients right now. Obviously, there's a lot of uncertainty out there. Of course, it's been a rough period for the S&P 500 just in the past couple weeks. Are you seeing fear right now? Are you seeing hesitation?
I think what's interesting about this is think about the trauma the average investor's been through. COVID was the fastest 34% drop, the fastest bear market, with that steep of a drop in history. And and somewhere along the way we had the tariff war that was also kind of a 20% drop really fast. This has been one of the longest corrections in history. Basically started about 20 months ago, and the market just cannot get back to its all-time high. It's just kind of a slog. So I've actually found quite the opposite. Most of our clients are just kind of shrugging their shoulders. I mean, it's not horrible. It's not great. Everyone knows what's going on with interest rates and what the Fed is doing, but unemployment remains strong. We're probably going to get to the other side of this a lot easier than we have with other corrections and bear markets. But some people are running out of patience, but I put them in the minority.
Since Goldman bought this business, the reality is assets only expanded by a couple billion. Do you think that you could expand those assets at a faster rate? And if so, what type of growth are you expecting?
If you look at Creative Planning, we're one of the fastest organically growing firms in the country. Our clients are advocates. They refer other clients in. Do I think that's just magically going to happen overnight with United Capital joining us? I don't. But I do think there will be some positive impact that happens quickly, and that over time we will be able to get it to do what the rest of Creative Planning does, which is grow organically at a rapid pace. So we have a lot of confidence in that. It's going to take a little bit of time, though.
You also had a separate deal with Goldman Sachs, a custody deal that you struck a while back. Does this signal a broader relationship between you and the Wall Street giant that you see evolving moving forward?
I mean, the custody space is really interesting. That we used to custody at Scottrade, TD Ameritrade, Schwab, Fidelity, Pershing. Well, you start to see all these companies buying up each other. And we really found ourselves with too few custodians. We always have to give our clients options and choices. And Goldman Sachs really stepped to the forefront here because they've just invested heavily in this, especially in a lending platform that allows them to lend against alternative investments, which a lot of our ultra-affluent clients have. And so they really fill a gap for us there. And so we were heading down that road regardless of this. In fact, these discussions happened far after our custody discussions did. And I consider them separate issues. But yes, I mean, here we are, having had a couple different encounters with Goldman, all positive, and all this year.